GM, welcome to morning markets. So, Bitcoin closed a 3-day candle above the high time frame support resistance level. Could that lead to a rally here? Very possibly. Look at the last time we lost it and closed back above on the 3-day, led to a rally, even respected as support over there. Total 3, Ethereum and others, so your altcoins, all below their respective levels. So again, focus is on Bitcoin, as I've been saying all week. That's offering the best long setups because it's the strongest and the most liquid, and of course, the least affected from that big liquidation day. So it's got the most volume, most interest, and easiest to trade for those reasons. So we do have another pivot level here. A few of you guys have been asking me, what's this 112 pivot? It's this high over here. It was the May all-time high at the time. That led to the breakout. That's another interesting level that price has ping-ponged between quite a lot on Bitcoin. Between 110 and 112, it's often been a lot of chop. But like I said, while we're above the high time frame SR, above the range low, then Bitcoin is in a good place. Because here are the high time frame SR levels on Bitcoin. As you can see, while we are above them, price tends to rally. If we go below them and stay below them, well, that's a change of character. That's something we've not seen before and likely marks something like we saw in 2021 where you get a weekly market structure break. So that's the low that leads to the most recent high getting closed through with a break. And of course, Bitcoin hasn't had that market structure break yet. It is still holding up. That would be over here. So you can see we closed the weekly above it. And it looks like we're going to close the weekly above the high time frame SR as well. So what have you got here? Potentially, this is distribution. But while it's not full ball back on, we're also not breaking down right now. And even if distribution, price can so easily just spend more time in here and drag on even till 2026. Imagine that. Imagine the sentiment, imagine how people would be feeling, probably even quite bullish. Look, everyone would be like, Bitcoin's holding up 6 figures for half a year now. All you 4-year cycle doomers are wrong. You'd get all of that sentiment over here. And that's just one example of how Bitcoin could play out from here. Not saying that's going to happen, but just trying to explain the game theory behind Bitcoin having rallies. And even if it does rally, it doesn't mean bulls back on. For the bull market to be back on, guys, we really need to see a close above at least this failed breakout level over here where we had that fake out. So close above here, then sure, bulls back on. You're looking at new all-time highs on Bitcoin, and ideally just a close above this entire distribution box. Until then, we're looking to trade the range and not get bearish when price is reclaiming the range, not get bullish when price is getting into that premium zone unless you see the clear flips. So unless you see the close above the distribution box, unless you see the close below the range low over here at 107.2k. So that's list level. We got range low, 107.2k. Until you see the closes below there, that's, again, the failed breakdown level. Remember, this is the failed breakout level. Those have been the key levels. Above there, you can mark up. Below there, you can mark down. So that frames your bias. But while we're within the range, you expect price at range low to be a buy zone, as it has been. Mentioned this in the videos this week. That leads to rallies. And of course, you've got this sell zone, this order block that led to the flush. That's where sellers are happy to show up at the moment. And right now, Bitcoin is trading into these daily 12 and 21 bands. Of course, it's a weekend, but green weekends can be a feature of Bitcoin and can foreshadow what is to come in the coming days. And I think if we can consolidate within these bands, that typically sets up a good base for a push higher because you're accepting within the bands rather than immediately rejecting like this. So interesting to see today's close. Do we immediately reject, or can we hold within these bands and set up a base today and tomorrow for a potential CME rally or Monday rally? So I do think the target eventually is this box again. And whether sellers show up, that's going to be very indicative of what happens next. Do we reverse, or can we actually even blast through and squeeze even higher? That's going to really be dependent on shorts and How much they have to close out, I'll be covering that later on in this video, looking at the data, because that's been interesting. So stick around for that. But Bitcoin, overall, you got to trade it within the range. It's mean reversion conditions. It's not the conditions for a high time frame trader right now. It's scalpers and day traders market. And eventually that will change. Eventually there will be a close below the range low, and you can set up your big swing shorts, or you'll start closing potentially above here after reaccumulating, and you can open swing longs. Once everyone gets comfortable day trading, and once the high time frame traders start turning into day traders, that's the clearest sign that we're about to change conditions back into conditions that would benefit longer holds. But at the moment, it's benefiting in and out short-term holds. So expect that to continue for a little while. But if people start becoming day traders, everyone who wasn't a day trader before starts becoming them, then you could expect that to change. That's how the markets work. Everything is about positioning. Everything's about when something becomes consensus, the opposite happens, because if everyone's positioned, how can it continue? There's no one left to join on top. Path of least resistance becomes the opposite. Whether that's price, whether that's day trading to swing trading, it all works the same. So quick rant there on Bitcoin, but that's what we're seeing on the daily. Now, of course, as I've been mentioning all week, distribution or reaccumulation, we don't know yet, but the path of least resistance, the max pain, has been for up. It has been for longs, and that's because, again, if you got liquidated, blew up your portfolio, or if you even de-risked on the bounce here, path of least resistance becomes up to test your conviction, or to test the people who got liquidated, to make them feel FOMO that their bags are now rising. That's why we've been taking longs, and don't get me wrong, we could still go down, but again, just wait for the trigger below 107.2k with daily closes. So low time frame, what are we seeing, guys? Well, this was what I mapped out in yesterday's morning market video. So I said CPI, that set a trap there. This 112k pivot that I showed you, that sets up reversal trades. And we dump right down, and you could see in the order flow very clearly it was shorts getting too excited. So look at this open interest ramp up. Mentioned this yesterday in the post CPI analysis, that you saw perp CVD, so the red line, this is the market order on the futures market, going down aggressively. So that means shorts are aping in, whereas spot stayed flat. And we know spot leads the market, guys. So yes, shorts can have their fun for a little bit. But when you're shorting off a data release event, you're not going to get a free ride. And that's why I said very likely either from the high time frame SR level with this green path that I mapped out over here, or from the weekly open, whatever one you get, you're going to see a short squeeze take place from one of those levels. And we, of course, got it from the high time frame SR level. That's what I mapped out in this video here. Either bounce from here, look for longs, or bounce from the weekly open if we need to go lower, because the short squeeze, it just was on the table. You have to look at the data sometimes. Obviously, I know not everyone looks at this, but if you tune into my videos, I'll always update if there's something significant here. So guys, if you appreciate the content, help me out. Drop a subscribe, drop a like, and comment on this video. Making this bonus video for you guys, and really appreciate your support. You guys make it worth making all these videos when I see you all vote in for double videos this weekend. So we've got morning markets today, alt analysis tomorrow morning when I'm going to look at altcoins, going to look at AI stocks, going to look at quantum stocks, and then tomorrow night we'll do a weekly outlook for a high time frame update of the market. So drop that subscribe if you appreciate that. Back to the markets, of course. What we're seeing from here is weekend squeeze. So this rally is very indicative of a short squeeze. As I said, you can literally see that because open interest is falling as we rise. So that means positions are closing, and that's likely shorts, which is driving the rally, which doesn't create a strong rally. When you have a short squeeze and a rally's fueled by shorts closing, it's not demand, right? The interest in the futures market is literally reducing. It's closing. There's less interest. Price is rising purely because shorts are having to be forced out of the market. So you can very easily just see all of these liquidity targets that are built up get tagged now. Any of these, because you've got potential stops over here now for anyone who was long in that, and there's not demand behind it, so price can so easily just wick into there from here. And I think losing this breakout level can set up that move to fill in some of this liquidity, and maybe it just fills into there, maybe it fills into there. I'm not sure. Obviously, weekend price action, don't expect big moves, guys. It's not the best trading conditions on the weekend because there's not much liquidity, so I always like to half size my trades, if not just completely not trade weekends. That's a rule I have in my systems where I just don't have to trade the setups if I get it on a weekend at times. So keep that in mind. You got liquidity levels over here, which we can easily take. And your bias should be for some liquidity to get taken while we're below the breakout level. If we actually can get back above this breakout level, then we're still on track for a potential move to this target over here. So you've got short stops that are going to be at the high of this wick that I think can get targeted. Whether that's today, whether that's tomorrow, whether that's Monday, I'm not sure. But what I think can happen is we push up to take this wick over here, take all that liquidity, and either that spurs us on for continuation and the 112k pivot level actually holds and we can see a move to the Q4 open. If so, can look for potential long setups. If you see signs of that pivot level holding, you can trade the momentum up to the Q4 open. From there, look for either a reversal. So again, we're always on the lookout for reversals at these pivot levels. It's only if they cleanly break and hold that we can potentially trade continuation. But these trades are much harder than the reversals because we are in mean reversion, right? So mean reversion literally means price wants to generally stay in the middle. So if you have price going like this, price generally wants to be around here. Doesn't want to trade up. That's why it's called mean reversion. So the reversal setups are always more profitable in these scenarios. But again, if you do flip it with high volume, you use something like that as confluence, then we've got this liquidity level at 116k that potentially we could target. So if we zoom out a little bit, let's take a look at what we've got going on in the market. So we've got this liquidity level here that if we can flip the Q4 open, I think that's in target that price is going to hit. Then again, rinse and repeat. Do you see signs of price reversing? And remember, reversal patterns, guys, you can look for sweep. You can look for a failure to return. These are all valid reversal patterns where you wait for the confirmation after the breaker structure. After the breaker structure. You want to look for one of these, be patient, trade the right side of the V. Don't just naked short levels because price can blast through, as you have seen. Wait for your confirmation, and that's how I'll be trading it from here on out. So potentially, you're going to see some short setups if we can reach some levels. But again, I'm always waiting on low time frame for reversal signals. So that's what I'll be looking at. Whether that comes today, probably not. Obviously, this can play out much later on in the week. That's what I'll be looking at in terms of trading, because of course, the main trade that I did have my eye on was this over here, which we didn't get. We actually bounced from the high time from SR, as you guys know, but this is still on the table for me. And it probably comes Sunday night, Monday, as I said, where we've got this weekly open here, which is clustering with this liquidity over here. That can offer a good reversal setup if we make our way down just to mean revert some of this rally. So yeah, interesting from here. Can we get to this CPI stop? If so, look for continuation or reversal. All depends on this 112k pivot level. Or if we do come down, then you're probably looking at some weekend liquidity getting hit in this short squeeze. Break the high time from SR, and you're probably then looking at a move to the weekly open. So messed up this chart over here. Let's grab it back. There we go. So if we lose the high time from SR, then potentially we're going to get this nice setup over here around this weekly open and liquidity. So that's what I'm looking at on Bitcoin. That's the day trading setups. A bunch of different ideas around these levels that I'm going to be trading, but main one I like is this one here, to be honest, because it would offer a big flush. And again, If you flush super hard, price is then likely to mean revert because it wants to be in the middle. Now, if we are just going to break down below the range low, that's fine. Potentially then we're going into a downtrend. If so, that's why my stop's there, to take me out in that scenario. Because that means we're going into trending rather than mean reversion conditions, so I don't want to be in the long. That's why you have your stop, to protect you. Stop is your friend. So that's the setup I'll be looking at to see if it plays out or not from here. So a lot of different ideas. Hope that makes sense to you all on Bitcoin. So that's the focus, not looking at E for altcoins. They don't have the right liquidity at the moment. Bitcoin's got the best volume, best liquidity. So stocks, what have we seen? Stock market is at new all-time highs. Daily closed at all-time highs. So what are we looking at on low time frame? Now, of course, this chart isn't open right now because it's the weekend. You only got crypto open over the weekend, but TradingView, super slow, of course. TradingView loves to troll me. Absolutely amazing stuff. Here we go. Chart over here, what you want to look at is this range. So grab a fib tool from low to high. We haven't closed above the 1.2. So it's not an official breakout yet as per my systems. Could still fall back and continue ranging here, but that's going to be seen. Can we hold between the 1 and 1.2? That sets up a breakout. Do we lose the 1? Then on the close where you lose the 1 level, that's when you can then look for mean reversion. Either it comes to the 0.5 or maybe it comes back down to that discount zone. Of course, you've got discount zone over here and you've got premium zone over here. Break above the deviation points at the 1.2, then you're looking at trend continuation higher. So this is what I'll be looking at in stocks. Now, stocks, of course, strong. Crypto, not as strong. Something that you've got to think about here. Why is that? Why are we seeing stocks at all-time high, but Bitcoin not? Why are we seeing gold at all-time high, but Bitcoin not? What does that mean for the rest of the cycle? It's going to be very interesting to see if stocks do break out or they do retrace, to start looking into that. But I'll dive deeper into that on Sunday evening in the weekly outlook for that high time frame macro analysis. At the moment, stocks are in this range, so watching if we cleanly break above. If so, consolidate strongly here, or if we lose the 1, then potentially we're finding support at one of these other fib levels. And gold, it's a similar story. So trading gold, again, gold, of course, is not open right now. Only your beautiful crypto is open over here for our beautiful day trades. But gold, looking at a range here. So sticking to the low time frames today, we're at, of course, a potential range low. This hasn't actually confirmed as a range. It will only confirm if we can make a move above that 0.75. Because at the moment, you could still just be in a downtrend here on gold. So that's going to be very interesting to see. If so, what I'd get is my minus 0.2 deviation. And if we close below that, then you're looking at downtrend continuation on gold. So watching for closes below the 1.2 to see if we are just going to continue lower. But what I suspect is because of all the FOMO that built up here and then the complete 180 in sentiment saying gold's topped, we probably have something like the orange path back towards those range highs. And again, got your discount zone over here and your premium zone over here. That's how you want to trade gold. It's mean reversion right now. We're no longer trending on the 4 hour. You can see that clearly. Structures are broken. If you get on something like the EMA bands, let's do that over here. Got these awesome EMA bands I built. Going to be dropping that to you guys. So bands are red on the 4 hour. That's another sign that we're in mean reversion. So again, you're just looking for, can we get to the premium zone? If so, look for high probability reversal setups, whether that's a sweep, whether that's in here. If we just continue downtrending and cannot bounce, then actually you're looking at the minus 0.2 for potential breakdown. But again, more likely the orange path on gold. So that is morning markets, guys. Those are all the setups that I am looking at. If you enjoyed this video, smash a like, smash a comment, hit subscribe, turn that bell on. Seen a bunch of you. Over half of you aren't subscribed. So please help me out if you enjoy these videos. That way I know you value the content. GM.